Hello, today I present to you the third edition of the Golden Way Business News. In this edition, we will talk about rising trends of gold prices, accelerating inflation and falling Bitcoin rates. Gold prices have passed the mark of $1,900 per ounce and continue to grow, renewing multi-month highs. The precious metal acts as a defensive asset against the backdrop of rising inflation and continuing soft monetary policy of the Federal Reserve System. Until recently, cryptocurrencies were considered as an alternative to gold, as a defensive asset. However, they do not show a significant recovery in prices after falling last week, and the expected tightening of regulation puts additional pressure on the prices. For the first time since the beginning of January, the gold price rose above the mark of $1,900 per troy ounce. A steady growth has continued since the end of March, and during this time, the price of gold rose by 13.5%, and over the past 2 weeks by more than 5%. Increasing of the multi-month high is the result of US macro statistics, which indicates a slowdown in the recovery of the labor market amid high inflation rates. In April, the number of new jobs outside agriculture increased by only 266,000, which is almost 4 times lower compared to analyst forecast. At the same time, inflation in April rose by 4.2% on an annualized basis, compared to the expected 3.2%. As a result, investors are increasingly concerned about the prospect of excessive inflation, and as a consequence, they are increasing investments in traditionally defensive assets, such as gold and silver. Last year, many institutional investors predicted protective properties for another asset, Bitcoin, which price has grown at a record pace. In such conditions, some investment banks began to question whether digital currency could become an alternative to gold. The limited offering of Bitcoin, good liquidity, and daily turnover reached from $30 to $50 billion. High capitalization, which exceeded $1 trillion, spoke in favor of that. At the same time, according to the World Gold Council, the physical gold reserves of investors and central banks are about $4.8 trillion, with an additional open interest of $1.1 trillion through financial derivatives. Gold trading volume in 2020 averaged about $180 billion per day. However, after the crash last week, the Bitcoin rate has not recovered. According to the Reuters, the rate of the leading digital currency is around $34,000, which is 1.8 times lower than 2 weeks ago. The correlation of the Bitcoin rate with the S&P 500 index is much higher than that of gold. This means that, on average, Bitcoin is viewed by investors not as a defensive asset, but rather as a risky asset. The growth of money supply in the world allows investors to direct it into various assets, including Bitcoin. The rise in inflation will force central banks to start tightening monetary policy, and as soon as this starts, speculative assets like cryptocurrency will be the first to fall. In the event of hyperinflation, there will be a blow to purchasing power and household wealth, negatively impacting the demand for Bitcoin. That is, unlike gold, Bitcoin does not particularly protect against an inflationary scenario. Another risk for digital currencies is the growing regulatory pressure. In recent weeks, the new chairman of the Securities and Exchange Commission, Gary Gensler, as well as representatives of payment system and banks in China, have criticized cryptocurrencies. See you in the next edition of the Golden Way Business News.